Good morning, investors. Welcome to Wednesday morning. It is an honor and a privilege to be here with all of you for yet another TipRanks webinar. Now, if you are brand new to the webinar series, my name is Ari Gutman. I am a customer success manager here at TipRanks with one job and one job only, that is to be here for each and every one of you, our investor community, and most importantly, alongside with my team, just help level the playing field for all investors. Now, how exactly do we do that on these webinars? Pretty simple. We just discuss our economic backdrop briefly before getting to a TipRanks tool of the week or a brand new feature. So I'm very excited because today, it's not just another TipRanks tool of the week. It is actually a brand new feature that TipRanks just recently rolled out. And we're going to get to that brand new feature in a hot second. But first, let's just paint our economic backdrop, get a better understanding of what happened last week, where we are rolling into this week, and how we may expect to conclude this week, and just looking a little bit into the future to the best that we can. So last week, if you were with me on last week's webinar, we were talking about how Home Depot as well as Walmart came out with their earnings. Now, they did in fact reach analyst expectations and the street's expectations. However, they did give incredibly weak guidance. Now, that certainly started last week off on a rather nil note, if you will, with investors, I think, becoming more weary, and that led right into Wednesday when we had the FOMC meeting minutes come out for economists, investors, retail investors, all of us to digest and analyze. Now, really what those minutes had shared was absolutely nothing new. What those minutes really shared with us was that the Federal Reserve was going to just continue to do exactly what they are doing to the best that they can in terms of fighting inflation. Now, what I like to say is what we tend to see in the stock market, definitely within the last year, is a lot of hope and optimism that builds when the Federal Reserve is absent from news headlines. And that's because we have the Federal Reserve that typically delivers more of the negative news for us in terms of interest rate hikes to probably come our way, which those minutes alluded to. However, we got those minutes, and I think we had a lot of hope and optimism that was built that finally we would get a Jerome Powell in the Federal Reserve sharing with us that we're going to see that pause or a pivot. Now, what the minutes again shared was that we're very likely to just continue to see interest rates rise because we're battling stubbornly high inflation. Now, webinar to webinar, probably throughout the past couple of months, I've been sharing that we've been winning these smaller battles, if you will, against inflation, but we have a war that is yet to be won and most likely will be ongoing for the remainder of 2023, which probably isn't the best news for all of us. As I know, at least myself as an investor, I'm looking forward to rallies and definitely entering into a bull market. However, I'm really not expecting that entry into a bull market until the end of 2023, potentially into 2024. Now, why do I say that? Well, it's really, I listen into Jerome Powell and what he shares, and I listen into what CEOs are sharing, what their guidance is, and they're giving a lot of insight, not only as to where the consumer is, but really the overall market, what we're expecting, what we're experiencing. So just to touch on some of that, we, of course, have an incredibly strong labor market. And overall, throughout the month of January and into February, what we were experiencing was really the strength of that labor market. We had an expected jobs report that was supposed to come in at 187,000 jobs. That number came in at 517,000, over 500,000 jobs reported. I mean, totally unexpected. And I think, I hate to use it, but an unprecedented time that we're living in, we've been living in, and we're still living in. And I think we're going to continue to live in these unprecedented times, really, again, for the remainder of 2023. Now, the labor market being incredibly strong has unemployment right now at 3.4%. The Fed's got this goal to get inflation all the way down to 2% inflation, which means that their way of combating this stubbornly high inflation is continuing to raise those interest rates. Now, it's been speculated rather recently, at least according to reports that I've had my hands on and I've been reading, that there are some economists out there that are currently predicting the next interest rate hike, which is due out at the end of March, to come in potentially at 50 basis points as opposed to 25. Now, that very well may spook the market. We may see some volatility coming up in the end of the month, but March 14th is our next CPI date. That is a huge date for everyone's calendars to be marked because, again, we need inflation to come down. As of the last inflationary reading, inflation's at 6.4%. There was an expectation that we would get inflation down to at least 6.2. Again, just stubbornly high inflation that we are battling. So what are the next right steps for the Federal Reserve to continue to fight inflation with those chess moves of hiking interest rates, which is scaring now, of course, CEOs across the board, and they're all seemingly preparing for what could be, as Jerome Powell put it best, a bumpier road ahead. Now, we had earnings come out from Target. Target beat earnings, but again, gave that weaker guidance, really showing us where these CEOs are thinking the remainder of the year may head, which is not in a great direction. Now, we also have Costco, Kroger coming out with their earnings. We have Macy's and Kohl's this week as well. Lowe's came out with their earnings earlier this morning before the bell. And again, we had weaker guidance coming out from their executives as well. So all in all, just a lot of uncertainty that's out there in the market, which leads me now to really talking about not only the tool of the week, but how we as investors should be investing, or at least looking into the remainder of 2023 with the best possible investments that we can make. And that is, of course, with investments in stocks, at least if you're going in an individual stock direction, with companies that are well capitalized, companies that can handle the storm of a light to mild to even deeper recession. And of course, then companies that have strong leadership as well as strong brand names. Now, that's criteria that I've been sharing webinar to webinar with all of you, but I want to go and play it a little bit safer today and talking now about ETFs and index funds. And the reason I want to go in that direction is because, one, they're incredibly safe. During a time of uncertainty, investors love to go in the direction of playing the entire market. You're really running with the whole market, investing into the whole market, especially if you're following through on John Bogle's advice, the founder of index funds, the founder of Vanguard, who had shared with us the best thing that an investor can do is really just get their hands on a broad market index fund that covers growth stocks, value stocks, small caps, mid and large cap. So you're really not going to miss a beat here in the market when it comes to investing in an index or an ETF. But the bigger question that TipRanks has posed is, well, how does an investor really know which ETF to get invested into, which ones they should be getting invested into, and what do the metrics really look like within these ETFs and index funds? Which leads me now to the tool of the week. The first place I want to go is research tools, and you'll have noticed, if you've been using TipRanks for some time now, we have added a little section here, ETFs. And underneath, we have top ETFs, and then we actually have 2 ETFs that are listed. But I'm going to go ahead and click on top ETFs for us. Now, we have a compiled list. The top ETFs that are listed here, according to assets under management, you can see that on the right-hand side. But this, if I'm an investor looking for a top-notch ETF or index fund to get invested into, is going to be the first spot on TipRanks that I want to come to. And I can scroll down this list, and you can see a plethora of funds to choose from. But just for the sake of today's webinar, I'm actually going to go with the largest here, SPY. It is essentially the S&P 500. Now, the first thing I always do as an investor is I come over to the analysis page, and I either click on year to date or I go about 1 year out. Because regardless of whatever stock page I'm landing on, or in our case here, SPY, a fund, I want to compare this analysis page to the economic backdrop that I'm currently in, right? The economic environment that I'm currently in, and ask myself if it makes sense. Now, amidst all the uncertainty and just looking at this chart, it really does make sense to me. But if I go and I take a look at what John Bogle had once shared, which was that the stock market is really a giant distraction to the business of investing. And if I am investing into, say, an index fund or an ETF, and I am playing the whole market in that broad market index fund, it's really hard to lose. So here I am on SPY's analysis page and I see red. Now, it doesn't really bother me as an investor. It doesn't worry me as an investor. This is essentially, as I said, the S&P 500. We are down. We know that on the year, but it's all about where we are going, not necessarily where we were. And as Buffett always likes to share, it's whether or not we believe in America, right? If we're betting big on America, this is a fund that we have right here that is allowing us to do just that. And taking a look at where businesses are right now, to be 6%, 6.35% down in the last 12 months or so here, not a shocker. Our economic environment is not so great. But again, is this a fund for me? Is this a fund that I'd like to get invested into? Well, I can start to look at some of the metrics here that we have on our right-hand side, or indicators rather. We have a TipRanks Smart Score of an 8. Now, for those of you who have been on TipRanks and are familiar with TipRanks, our Smart Score system scores the stocks at an 8, 9, or 10 if it's likely to outperform the market. Of course, over the longer span of time, that would be about 12 months. So this is not to say, okay, SPY has a TipRanks Smart Score of an 8, and by tomorrow, we should see this soaring by about 20%. This is to say that TipRanks over the next 12 months or so has a strong likelihood here based on 8 factors that SPY will outperform, which is good news as an investor and looking longer term into the future. Now, I do have some other indicators here for myself to take a look at, like blogger sentiment. I always love to see bullish blogger sentiment. I, of course, love to see increased hedge fund activity, which we'll take a look at in a hot second, as well as crowd wisdom, which is very positive and another strong indicator for myself. But before I get to this brand new feature on TipRanks, I want to just jump into some of the tabs here that we have on our left-hand side that are unique to these ETF pages. And I'm going to start just from the bottom here with similar ETFs. Now, SPY, again, the S&P 500, you're really just grabbing the market, if you will. But here are similar funds to SPY. Now, perhaps for whatever reason, SPY does not necessarily suit your portfolio. You should find yourself looking into similar funds to find which one does. But once you have a list of funds that you're interested in, whether index funds, ETFs, you should certainly come up to our tab up here, Holdings. And as I click on Holdings, we're now going to get a comprehensive breakdown of what holdings are in this specific fund. So we get this breakdown here, holdings count, 505 holdings, total assets. We go across the board here. We can see region, North America, category, large cap. But again, now we can scroll down. And what TipRanks has done is not only listed each company, each stock that's within this particular fund, but we've gone ahead and made it even simpler for everyone and already providing the analyst consensus, smart scores here for everybody, as well as weighted how much these holdings are within this particular fund. So why does this matter? If you are perhaps not interested in getting invested into an ETF or a fund, you can certainly come to a fund like SPY. You could start to go down the list of holdings that are within this particular fund. And now we have analyst forecasts here, which I will circle back to in a hot second, but I want to show everybody that we've taken it one step further and we've actually sorted through the highest upside potential stocks within the fund and the lowest downside potential stocks within the fund. Again, this is now an opportunity for me as an investor. If I am not interested in actually getting invested into a fund and I wanted to find individual stocks to invest in, this is another place, yet another place on TipRanks where you could, as a matter of fact, jump into these funds, take a look at which stocks are performing well, which ones aren't. Now, for me, as a long-term investor, an investor that really likes to find stocks that are beaten down, has the most potential over the long term to actually perform well, I actually always like to keep my eyes on lowest downside potential. So here on our right-hand side. And from here, I can click on the ticker and I can go do my due diligence on these stocks. But before we get more into analyst forecasts, I want to go ahead and talk about hedge fund activity that we're seeing within SPY. And what TipRanks has done here has, of course, delivered through on showing each and every retail investor out there what exactly are hedge funds doing. Now, when it comes to SPY, we see positive trends here of hedge funds increasing holdings by 1.3 million shares last quarter. You can go ahead and scroll down and see exactly which hedge funds. So the smart money that's been pouring money into SPY, what does this tell me as an investor is the question I'm always going to ask myself when I'm looking at hedge fund activity. And if I see a lot of hedge funds pouring a lot of money into SPY, it seems to me like perhaps smart money would be gearing up for potential volatility, that bumpy road ahead, again, that Jerome Powell has coined. Now, if I go one up into Crowd Wisdom, I do like to utilize this tool that we have, Crowd Wisdom, because I like to take a look at currently right now what other retail investors are thinking and how they're acting when it comes to investing. So I either have all investors here across TipRanks, and generally speaking here in the last 30 days, and even in the last 7 days, we see upward momentum when it comes to more investors adding SPY to their portfolio. What does that tell me, again, about that general consensus of what other investors are thinking? Now, as an investor, it comes down to one thing and one thing only. It's empowering myself as an investor by having the most information, by painting the best possible picture. So if I'm able to paint the picture here on what others are doing, if they're concerned, if they have fears, I can now start to invest with a different approach, if you will. I can take a look at what top performing investors here across TipRanks are doing. Now, of course, we have a dividend tab as well. Now, the dividend yield here is not listed just based off the fact that the stocks within SPY will alter their dividend yields, and that will change and alter the yield years. But we will get, at the end of the day, dividend amount per share. I want to show you guys through technical analysis as well. A recently added tool to TipRanks, but for those of you into technical analysis, now we have here to incorporated when it comes to ETFs and the funds across TipRanks, the ability to take a look into technical analysis, moving averages, oscillators, pivot points, and as we scroll down here, lines of resistance and support as well. Now, before I get to the featured tool that I really want to talk about this week, I want to show you quickly through charts as well, because if you're anything like me as an investor that is constantly trying to do my best to take a look at what ETF, what index fund, or what stock is the best out there to invest in, how's it performing pegged to other stocks or funds that are out there, I would come to my chart. And just for the sake of today's webinar, I just want to show you guys through comparing SPY, again, S&P 500, to let's just take, for example, Vanguard's Total Stock Market Index Fund. It's just another fund that is out there. It's an index fund, Vanguard's, that has, I think, a little under 4,000 stocks or holdings within it. But I want to go ahead and just see how SPY is doing in comparison to VTI. Again, Vanguard's Total Stock Market Index Fund. And so I have Vanguard's Total Stock Market Index Fund in this darker color here, black, and then I have SPY in green here. Now, if I'm confused about what fund to invest in, or even which stock, if you're on an individual stock page, but here we're with this ETF SPY, which fund do I go with, SPY, VTI? I can take a look at how they're performing pegged against one another. And of course, in understanding VTI has more growth stocks within it than SPY, it makes sense that I'm going to get a little more rapid of growth here, but also along the runs here, I'm seeing that VTI comes down quicker than does SPY. So this is your opportunity here within charts to just compare different funds. You can also click on studies here. We have you covered, and we even have events here with dividends in case you're wondering when dividends are paid out comes to SPY. And here we are with dividends. You can click on that. You get the ex-dividend date, dividend amount, and payday date. Now, I'm going to go ahead and click on Analyst Forecasts because at this point in time, I'm incredibly honored to share with each and every one of you that our team here at TipRanks has done it again. We are the first and only platform right now to be providing forecasts and price targets for ETFs, index funds, and funds across the board. How exactly do we do that? With weighted averages of all the price targets within the fund among other factors. But the most important factor here that I have for you as investors, again, as we go to take a look at our economic backdrop, and as we take a look at SPY, it's not about where we were last year. It's not even about where we are right now today. It is about where we will be in the next 6 months, 12 months, 2 years out. And this is what I absolutely love about analyst forecasts and taking a look at the upside potential that these funds could offer us. We see here when it comes at least specifically to SPY, 17.2% worth of upside projected. Again, that is from the weight of each of these holdings within the portfolio, as well as the weighted averages of all the price targets and other factors here that we're getting our $464.40 per share when it comes to SPY and investing into SPY. So by these projections, 17% worth of upside to come, which is promising, but based on the upside potential here that we're able to forecast, the question becomes, is SPY ETF here for me to add to my portfolio? Now, whether that was SPY or VTI or VOO, just other funds, if I go back to our research tools and go right down through each and every fund that we have the projections for you. And again, TipRanks has become the first and only platform to provide forecasts and price targets for our investor community. And join you once again on the screen to share with you that as we proceed into, again, what is very well likely to be an uncertain 2023, I only advise for each and every one of you to empower yourselves as investors. And that is exactly what we're here to do on TipRanks, is provide you with all the tools necessary for you as an investor to become an empowered investor, to become an informed investor. And with that being said, I want to wrap up by sharing with each and every one of you to keep your eyes on your emails, because this would not be a TipRanks webinar without sharing that we are sending you a special gift within your emails to take full advantage of the tools that we have for you here at TipRanks. And I look forward to next week and having you join me again for another TipRanks webinar as we get closer to March 14th, again, the next CPI day, which will be a big date. As we rock and roll into the remainder of the week, I'm wishing everyone happy investing. Of course, proceed with caution, take a breath, take a moment to pause, always do your due diligence. Join us here on TipRanks for that due diligence. And I'm looking forward to next week and having each and every one of you join me again right here on another TipRanks webinar. Thank you so much. And I'm looking forward to seeing you all again next week.